Hey guys, this is Dale Perryman here. Mike Carmendro is with us and my buddy Masu, and we're going to be talking about some of the things some trade ideas that he has, as well as kind of reviewing some of the things on his portfolio. So, sound good, guys?
That
Good.
is awesome. First, tell me what is 5 or 4 traders aren't what? I cannot see the rest of it on your T-shirt.
On my T-shirt,
Yeah.
5 out of 4 traders aren't good at math.
Okay. I couldn't read the bottom part of it. Okay, 5 out of 4. That's awesome.
Gambling Gary made me this shirt. You know how did he make you a T-shirt?
No, he didn't make me when he couldn't decide what he wanted to put in there. So
That's
funny. I didn't get one.
Yeah. All right. So maybe it says off the top of my head, I can't, like, are you high? I am. I'm a pilot, or something like that. I don't know. Something weird. We need to figure out the pilot jokes for that.
Yeah.
So, hey, I wanted to do a screen share and just show you kind of some notes I took on and teach you a little bit about how to do snapshots, right?
Okay.
So this is a snapshot of your portfolio, which Mike and I think are kind of cool because it's kind of like a trading journal on steroids where you can kind of take a snapshot of your portfolio in a particular time. And I've got them grouped here in terms of poor man's covered calls, which are all bullish, strangles, which are all neutral, and poor man's covered puts, which are bearish. And then these diagonals, and then you've got some core holdings, and then you've got a couple naked puts.
Oh, that's awesome. I didn't see that before. I'm going to look at it.
And just as to give you an idea, the way that you set up groupings is you click on settings,
okay,
and you go into your portfolio, and then you can scroll down and you can create any new group that you want. Like if you have a new kind of, so I've created those groups. And then what you do is to put them into a group, you just kind of click on this and you put them into a particular group,
okay.
right? So
that's cool.
Yep. And so these are the categories that I've set up. So here's kind of the note that I took today. I'm kind of keeping, I guess we're giving up your anonymity here, but I just talked to the launderer, that other launderer guy, not you. He liked CNK and it was considering a covered call. I suggested selling a naked put. CNK currently trades at $11.39. So you sell the July put for 80 cents. That would give you on 10 contracts, $800 in premium. 10 contracts equates to 1,000 shares. So it's 100 shares for every one contract.
Yes.
So it takes 4,300 in buying power for this trade. If the stock was to go down to 10 in the next 3 weeks, you'd own 1,000 shares at a cost basis of $920. So that's $10 basically minus the 80 cents that you collected. That's how I got the $920.
Yes.
Otherwise, you'd keep the $800 that you collected for selling that naked put and then turn around and sell them in August on the first down move in CNK. The reason I'm saying a down move, it's kind of like it goes on sale when it's a down move. So you'd even get a better cost basis. So that's kind of why I'm saying when it goes down. So right now, your account has $7,000 in buying power. And currently, your beta weighted deltas is 512. So if you were 100% invested in SPY, your beta weighted delta would be 428. So therefore, if SPY was to move up $1, you can expect to make $428. If it goes down $1, you can expect to lose $428. And so roughly you're taking about 20% more market risk than just buy and hold on SPY.
Yeah, I couldn't explain it any better.
So that's kind of a short, and that way we'll have a record there. It's kind of a way of documenting your learnings or documenting your thinking at the time, and then you can go back in time and see if you were correct and see kind of how things played itself out. So it's kind of a way of, almost a knowledge management journal.
Absolutely, yes.
So tell me why you like CNK.
Well, because I mean the high on CNK, I don't remember now, was over $38. Sometime now it's dropped down to $11.90 or 80 cents. I mean, the reason I like it, that the movie theaters are not going to die. Basically, there's no way. I don't think that they ever go bankrupt, because there is going to be movies made, and those movies need movie theaters.
Gotcha.
People go and watch the movies. Then basically, it's just a matter of time that it picks up, and it will go up. That I don't have any doubt in that. Now, when is that going to happen, and how much it's going to happen? That I don't know. I don't think anybody knows, but it eventually will.
Gotcha. Well, I chatted with Mike before you joined us, and while I like selling the naked puts, and by the way, is that a bullish strategy or a bearish strategy, selling naked puts? I'm testing you here.
That is.
So. This is your test.
That is bullish.
Yeah, exactly. It's a bullish strategy.
Yeah.
So while I like that strategy of selling naked puts, currently you're pretty bullish. I tell you and John Sklar are kind of perma bulls. Your accounts are very bullish. Partly it's so bullish because the market went down 700 points on Friday, which kind of took us. So I think probably what we should do, if we're smart, is have 2 or 3 bearish trades that we like. And if the market corrects, why don't we put on some bearish trades too, in addition to this? So what do you think, Mike?
Yeah. So Masu, my opinion, this is the way I think, and I just want to throw it out there, and you could agree with it or not, or you can think about it. You can interpret it whatever way you want for now, because nobody knows exactly what's going to happen. But the way I think of things is, when I look at your portfolio and I look at the the amount that your portfolio changed relative to the S&P on Friday, I feel like a bullish trade maybe isn't the first trade I would do right now, because you're already bullish. So, like 7 out of 10, is it like 7 out of 10 stocks follow the index? Is that what it is? Dale, have you heard that?
I don't know.
You heard that number? I've heard that number,
okay.
And I'm pretty sure it's something like 6 or 7 out of 10 stocks will follow the index. If it's up, 6, 7 out of 10 will fall. And that makes sense to me, right? I mean, obviously the whole index going down 2%, it's very hard to have a stock that's going to go up. Right?
Yeah.
So if 7 out of 10 stocks follow the index and your portfolio is very bullish, I would be looking to find some bearish trades right now instead of a bullish trade. And because the numbers tell me that if the market rallies next week, you'll do very fine, right? Your portfolio will do great. So, that if we were to suggest another trade, it would probably, we think it should be bearish.
Well, maybe we should brainstorm. I'm getting an echo from somebody. Mike, are you wearing? You're not wearing your headphones, but Sue's got his headphones on. It might be you. I don't know. Maybe we should brainstorm some possible bearish bets.
Yeah, in case of CNK, I really don't think, well, at least my idea that it cannot be bearish. As far as the bearish, I was thinking of definitely some airlines that I'd like to go bearish.
Here's another idea too.
Let's hear. I want to hear his bearish ideas on airlines, because so far you've kind of been bullish on them. So has your thesis changed?
Well, yes, because of the basically the news that I'm getting here and there from all the airlines already. Delta is basically laying off 2,500 pilots and offering early retirement to 7,500 more pilots.
Okay.
And United Airlines has already said it about a month ago that as soon as October 1st, because that's their deadline, and they got subsidies from the government, like, I don't know how much was it, 16 billion or something like that. But the thing was that they should not fire or furlough any employees before September 30th or 31st or whatever it
Okay.
is. So United Airlines has already announced that he's going to get rid of 1/3 of the employees.
Sometimes that cost savings actually helps the stock price. I'm looking at your portfolio and you've got United, but right now you're pretty neutral on United, given the way things have moved. On Spirit Airlines, you got a small bullish. You're mostly bullish though in Southwest, which I would tend to kind of agree.
That way?
Yeah, I would tend to agree with being more bullish on Southwest than some of the other ones. I don't know how you feel.
Yo, did you stop sharing your screen?
I did.
Okay.
You want me to share his?
While we're talking about the portfolio, I think it'd be useful to be able to just be looking.
Okay. I'm going to show it on TOS, or do you want me to show you on TradeDiff?
I think TradeDiff's fine.
All right.
And I have while you're doing that, there's also another idea, Masood. If you're not completely sure, like if you're kind of unsure, I mean, everyone is basically unsure. No one's sure about any trade, right? There's nothing guaranteed. So there's another way to do it too. Like if you're looking to add a little bit of less bullishness to your portfolio, if you're afraid that the markets might go down and you don't want to lose, because right now, I think Dale said earlier that you're actually taking, was it 20% more risk than the S&P as buy and hold?
Yep.
Yes.
So that means you're going to lose more than the market if the market goes down, but it also means you're going to make more if it goes up. So if the risk worries you, there's also an opportunity for you to just kind of make a bearish play on the indexes as well. That's an idea.
Bearish on the index?
Yeah.
I mean, it's a way to guarantee. The reason why I like that, I do that often because it's a way to guarantee that if the market goes down, you'll make money on that trade, guaranteed. Like if you go bearish on the S&P, the SPY, and the S&P goes down, you're going to make money as long as it's not like.
So it kind of cushions a risk from being overly bearish. So let's say you're 120% of the market risk, and you wanted to take it down to 100. So what we could do is do a bearish play on the QQQ or the SPY, to kind of soften that blow.
I mean, honestly, I don't see any reason why you should ever be more leveraged than the S&P. I don't see why you have to do. I mean, that doesn't make sense if you're trading options because you're being more directional than neutral.
Right.
So
I understand what you're saying. Yeah.
So I don't like losing more than the market when the market goes down. And I'm okay giving up making less when the market goes up. Does that make sense?
Right. Especially since it's not for short term. I mean, that she's not buying or selling stocks. Yeah.
If the market goes up 2% and I make 1%,
right,
I'm okay with that. So like that's okay because options, we're trying to make money on the sideways movement as well.
Absolutely. Yes.
So when the market's not going anywhere, we're hoping to make 1% when the market's making 0%. So that's going to add up to eventually being more than the market eventually. So
I like that idea. Yes.
So, Mike, do you want to brainstorm some possible bearish things?
It's pretty simple for me, it's pretty simple.
Did you want to show anything else on his portfolio? Because what I thought I would do is just to stop the share until, and then as we brainstorm, maybe I'll even document something that we're brainstorming on.
I think you can stop sharing. I just wanted to just say.
In fact, we could brainstorm here in the Collaborate tab, and then I'll post it so he'll have it on his account.
Go ahead. I think that'd be a great idea. So let's talk about bearish potential plays. So Masood, we're going to put this on your portfolio. It's going to be there for your reference.
Okay.
But in general, so Masood, like the idea is like, if you are you concerned at all that the second wave pandemic is going to bring the markets down another 5 to 10%? Does that concern you?
Well, the second wave. I think the second wave is already here.
Sure.
So, so it's gone down. Nobody knows what's going to happen on Monday, but I mean, I'm always happy because I think the market is already being down enough, and it's time for pickup. But I may be wrong also. I mean, it's not.
Yeah.
You think the market?
I'm
wait,
more
wait,
bullish
you,
than bearish. I mean,
you think the market's been down enough since when? Since Friday?
yes,
Okay. Okay.
that's what I think.
Yeah.
Okay, that's fair. I mean, that actually mentality has worked well in the last 2 months. So
It's worked for John
in other words,
Sklar.
buying the dip. In other words, buying the dip.
It's worked for John Sklar because he's leading the contest, but
Yep.
at the same time, the market was down 2.5%, and he was down 7.
Yeah. So John
So it's
was
just-
down 7%.
Oh,
You
it
know,
was, yeah.
That's
Yeah.
almost. He was down almost 3 times. He was down almost 3 times the amount of the index.
But
Wow.
to his credit, everything he's been the uber bull, and he's still up.
But he's up 25% almost on the portfolio.
Yeah. In what period of time?
It's like a couple weeks. So, but as options traders, I don't think we're not looking for that kind of, you know what I mean, right, Dell?
I don't want to be riding a roller coaster.
We're not trying to make 25% in a couple weeks.
Yeah, exactly. I mean, we're in it. I think we're in it for long term.
Right.
We're not. I mean, day traders.
Yeah.
And that's not the way we should think. I should think, of course, at least.
I mean, my typical thing is I've been bearish on cruise lines, casinos,
Yeah.
airlines,
State casinos.
Uber, Uber, Lyft. I think that probably Avis,
car rental
companies. Those are the ones that are kind of on the top of my mind. Offsetting that, you've got all these people using Robinhood that are gambling it up and betting on bankruptcy recoveries and from Hertz as we've seen. So you kind of get this big down move and big up move. So I'm not saying I'm right either. But I'm just thinking of places with Corona outbreaking that I would hate to be hanging out, and it would be on, cruise ships, and those tend to be a Carnival cruise line,
Right.
Norwegian cruise line.
Right.
Then casinos would be Las Vegas Sands, Wynn Casino.
Right. We already have Wynn in there, don't we?
Yeah, I think so. I'll check. Yeah, we do.
Yeah, and also Las Vegas.
Yeah, the thing is, it's kind of swung enough to where we've almost no longer have negative deltas in Wynn. And in Las Vegas, we don't have Las Vegas Sands anymore, so we might consider that. And we don't have anything in Norwegian Cruise Lines. So and then would be Avis in terms of car rentals, and then maybe like Lyft in terms of, people jumping in taxis. It's just anything that people feel like they're getting in with tight quarters with a stranger, and these are
right.
These are the things that I've tended to think of. But the other thing that Mike's saying, I think, is not a bad play at all either, is just to use the QQQ
index, right?
The index, or
you can even go more specific and look at all the index that holds the stocks that you're bearish in.
Exactly.
I don't know if
there is an
airliners, what index they're in.
That's a great idea.
There's an airline index. And I can't recall off the top of my head what it is, but let me find out.
So Masu, instead of going like bearish on 4 airliners, go find the index that contains all the airliners, and then go bearish on that. And
I like that
then
idea. Is there anything like that index for casinos? I don't know. I wanted to ask Dale. I mean, anytime we talked about the casinos, I always heard the Wynn and Vegas Sands. I mean,
Yeah.
why is it specifically these two? What about the others? I don't. Not just a question.
Well, the number one thing I always look at is liquidity, and there's
Okay.
there's a lot of casinos that there's not good liquidity. So let me give a one sentence description. There may be people listening to this video that aren't up to date on liquidity, but it's the difference between the bid and the ask. It's the hidden cost of trading. So if there's a big spread, every time you get in and out of it, you're leaving some money on the table. A very tight spread between the bid and the ask is more economical. So we like tight bid-ask spreads. So for example, Apple, you might have a 3 or 4 cent spread, whereas something else that doesn't have a lot of volume trading, you get bigger spreads. So you might be leaving every trade you make in a bad spread, you might be leaving 50 or $100 on the table.
I see. Okay.
So I'm looking right here at, there's something called JETS, Jets.
Okay.
So I'm going to stop my share here, and then I'm going to share another screen just to kind of take a look at on TOS the chart for JETS, just out of curiosity.
Mm-hmm.
And it's already kind of been beaten up considerably, but you look at it over a 1 year period, you know, it's been as high as $31 and it's now trading at $16. It looks like if I look at JETS, the companies that are inside of it is Southwest, American, United, Delta, Air Transport Services, SkyWest, General Dynamics, Alaska Air Group, JetBlue, and Spirit. Now, I think the one thing that's helping airlines in terms of cost is low price of fuel. So there may be some that's in there that, and it looks like most, General Dynamics too, but that's military, and I would be more bearish on consumer airlines than I would, you know, General Dynamics.
General Dynamics is in there also?
Yeah, it's a part of that JETS holding.
I see.
So I guess that's the bad thing, is you might go bearish on an index and it may have some things inside of it that you're like, well, I'm not really bearish on that, right? So, but that's an option. I'll put it down as an option here in our mini brainstorming. I like it. So JETS. So anything else?
If we are going bearish, basically, we need to go bearish. I mean, JETS is going to be, I mean, that's, I still favor JETS, and I don't know which one I favor better, and the casinos. One of the casinos. So
having said that, if he's, and maybe it'll change, but when they opened up, did you see how crowded the casinos were?
Oh, I'm not surprised.
But at the same time, there's so many parameters around that. You know, I don't know.
With this second wave that is getting up, getting worse, I mean, that is going to drop again. So
yeah. Well,
they had what, 60,000 today, or 57,000 tested positive, something like that.
It's a new record. I think a new record is supposed to be the worst ever since it started.
Yeah. So let's just say offhand, the next opportunity we have is look to take a bearish bet on maybe Las Vegas Sands, which you don't have, and maybe JETS.
JETS. Okay.
You know, if I was to pick another one, it might be Avis, because I've heard some things about that they may also be at risk of a bankruptcy.
Yeah, that'd be another one. What do you think, Mike, about these?
I mean, just another tip. I'm actually looking at your portfolio right now. And another tip that I might mention is that when I'm looking over your groups, what I like about TradeDiff is it separates the groups. I can immediately tell that I mean, you're very light on the bearish trades right now. Like your poor man covered puts are a fraction. I mean, those positions are very small right now.
Right.
And I'm looking at your even your strangles are bullish because
mainly because the market has moved
down. So that's, I mean, that's whatever the reason it is. It's the fact now that they're bullish. So as your portfolio changes and moves, as the market moves, looking at your groups is a great way for me to see, like, okay, so your strangles are bullish. So you already got some bullish deltas there. And I'm going to go ahead and just say, hey, look, if you're going to put on a trade, just make it bearish. Don't even think about bullish trades right now.
I see.
It's just not a good idea to put on another bullish trade at this point. You'll make plenty of money if the market goes up next week. I can guarantee you that.
Yes. Okay.
So yes, the airline's fine. If you want to do the index, I think it's a great idea just to add bullish negative deltas to your portfolio.
Yes.
You know, your poor man covered puts, they look pretty light. I mean, look at them now. Like Dale, have you looked at those? Because they have.
Yeah, I'm looking at now. I made a mistake of kind of going in the wrong portfolio, but it looks like in terms
you got
of
AMC, you got CMG, you got Win, and those have pretty much moved against you to the point where there's not much bang for your buck anymore in those trades.
Right.
You're not going to look at CMG. By the way, I'm very bearish in CMG. I'm 100% with you on this, and I have my own trades on CMG, and I've been trying to put bearish trades on for the last month, and that may be one of the more interesting ones I think that has potential here. So.
Yeah, so if you just look at the market value of all the poor man's covered calls, you know, you get
1,500.
Yeah. You get 77,000 worth of that, and then the market value of the strangles, which there's a lot of bullishness in that. But you look down here at the bearish, and there's only like $1,500.
Yeah, you got so you got $1,500 worth of value, market value in your poor man covered puts, whereas you got 77,000 in your poor man covered calls and 12,000.
Now he's got maybe 3,000 worth on this bearish diagonal in Tesla. So there's like 4,500. So, but you see that you know, it's 4,500 against 80,000.
And there's no great way, like bearish, like beta weighted deltas helps, but you kind of have, in my opinion, you kind of have to look at a lot of like 5 different things to really get an idea of your portfolio, you know. One of them beta weighted deltas, you know, maybe just like how big your groups are relative to each other. So my suggestion is another poor man covered put somewhere in something.
Bearish.
Poor man covered put. I mean, you got plenty of, you know, I don't know how much I don't know how much allocation he has.
I would say, you know, he's only got about 7,000 allocation, but we could get out of some things to give him more. And he's even talked about possibly putting some more money into it if you wanted to. But I would say there's.
I don't think you need to put more money into this. I think the count's a good size.
Yeah. So there's 3 ways I think I would put on a bearish trade. One of them would be a poor man's covered put. The second one is what Mike loves a lot, which are diagonals, a bearish diagonal. And the third would be selling a naked call on something.
Yeah, I like those. I like that idea. The problem is that allocation might be bigger for that.
You mean the buying power?
Yeah, selling a call is like, you know, it's naked, right? So they're going to make you.
Yep, that's right. So probably, given that,
I would say poor man covered put or diagonal, bearish diagonal.
I think you're right.
And I may, on top of that, I may throw on that maybe the poor man covered put should be a little more bearish than your average poor man covered put, just because you need the deltas, right? You need the. You can't put on. Honestly, if you put on 10 more poor man covered puts, it still might not be enough.
He's currently getting a significant amount of bearish deltas in a Baidu strangle, and it shot up. So his call is at 125, and Baidu is currently trading at 121, so it's in the money
I see that. That's a
in
good
July.
one. Yeah, I see
So
that. That's
it's
also a good
giving
thing, yeah.
him 107 minus 107 beta weighted deltas, which helps.
So then that leads me to my next question is where are his major positive deltas in these strangles? Let's see.
His major, he's got a poor
SQ,
man's covered
Square.
call in Apple. He's got 70. Disney, he's got 102. Facebook, he's got 70. Wells Fargo is big because we let a short put go into long actually stock, and we sold against it, and that went down on Friday. So he's got 90 beta weighted deltas in Wells Fargo.
Yeah.
So those are kind of the top. He's got basically 5 things that's holding the majority. It's Apple, which I'm still bullish on. And then Citibank, which I'm okay with being bullish on banking. Disney, I think it's going to come around. It's a dominant brand, although, they're delaying the openings of their parks, which is bearish, but, I don't mind. I might pull back on Disney. Facebook has got basically 70 beta weighted deltas. So it's Apple, Citibank, Chevron, Disney, Facebook, and Wells Fargo. Those 6 are the 6 largest bullish holdings.
That's actually interesting to point that out, because Masu, when I look at my risk in my portfolio, I like to look at where my largest holdings are, my largest positions are first. And that, Apple, Facebook, and he mentioned like 3 others that
Citibank,
so
Disney.
My next question is, could I put on a trade that would make money if those go down, and then also make money if we go nowhere? That's the trade I would look for.
And I call those neutral to bearish, and we might and diagonals or
that translates into a theta positive trade with negative deltas, meaning you'll gain money if the market goes nowhere, and you'll make some money if the market goes down. The tricky part is how bearish you want to be on that, and how much theta you're willing to give up on that. That's always the tricky part.
Yeah.
And so I mean, we could actually, if you wanted to, we could play around with exactly putting that actual trade on, looking at some pricing of diagonals if you wanted to.
Yeah.
I think we should I think one would be interesting, just to see what it did with its deltas and stuff.
Yes.
Okay.
Why don't we look at 2 things? Why don't we look at a poor man's covered put and a diagonal?
I'm looking under collaborate, and I don't think I saved this little brainstorming thing. Which one did you want to look at?
I just was gonna say, why don't we just look at? You can switch over to TOS, I guess.
Okay.
And then we can look at a poor man covered put and a diagonal.
Am I sharing? I'm not sharing TOS now. Nope. Okay. Share my screen, and we could do that for which one? Do you want to look at one on Las Vegas Sands, or?
That's your call. I don't have an opinion on Las Vegas Sands or any of those. But
yeah,
if you're gonna do the diagonal, then I would just do it on the SPY or the QQQ, just to make it simple.
Yeah, let's start with one on Las Vegas Sands. So what would we buy? It's currently trading at 43.33. And since you're the diagonal guy, what strike would you buy?
Are you sharing your screen?
I don't see anything.
I don't see it.
I am now.
Okay.
So if you were selling, would you do, I know you're liking the weeklies now, would you do buy in September? Would you buy in August?
I'd probably do in August.
Okay. What would you buy in August if you were bearish? Bearish to neutral on Las Vegas Sands.
So if I was bearish and I thought Las Vegas can go down to, I don't know, what's the chart look like? Click on chart.
Do you want to do a bearish diagonal or a bullish?
Oh, bearish.
Or a bearish call diagonal or a bearish put diagonal?
Usually I do puts.
Okay, 43.33. It's down from a high of 70.39. And
So maybe when I'm looking at this chart, maybe it can retest the bottom. Who knows? At 30, maybe at 30, maybe 40 or 35 is what I'm thinking. Maybe it can go down to 35 or 40.
if
Right.
I was, retesting the bottom, I'd draw like a chart right here at 36
Yeah.
myself.
The problem is 36 might not give you much.
And, the top here is 55.
So let's look at the 40, 35.
Okay, so you're buying the 40 in August,
Let's look at that. Yeah, let's buy that one.
and you're be selling the July.
July 35.
35.
Yeah, let's check that out. Let's look at that on the
Let's just do 5 contracts. Let's see what that looks like. We're going to analyze tab here, and it's currently trading at 43.33. So, we're not getting positive theta on this until it goes down.
Actually, no, you're getting, where are you looking at?
I'm looking at its current price is 43.33.
Where are you looking data at?
See this number here, July 18th.
But what made you say no positive theta? I'm seeing positive 1.
Okay, I'm putting it on today's price, and if it went down to that, it closed unchanged on July 18th, I'd lose $169.
Right.
So that, which basically means, if it's unchanged, I lose $164.
If it's unchanged, yeah. If it stays there, where it is right now.
Yeah, and my goal for the trade is to make a little money if it's unchanged, and to make some money if it goes bearish. So that's all I'm saying.
Yeah, no, I hear you. It all depends, right? So like,
I would probably okay. So let's play around with this. If we bought the 45 and we sold the 40,
yeah,
what it looks like.
Yeah, you can move it up a little bit, and then you can.
It's 43.33.
So in other words,
here we are. So see this now we're making $985 if it's unchanged.
Yeah, this one gives you more theta and less bearish deltas, and then it also gives you. I mean, this is also a good one too.
I prefer to do these because, therefore, if I'm not right and it's unchanged, I still make money. So this to me is more of a neutral bearish as opposed to more of a just flat out bearish. Now, the downside is it won't give you as many negative beta weighted deltas.
Yep. That's always the trade-off.
The upside is you still make money on it even if it's unchanged.
It's always a trade-off, Masu. Do you want more negative deltas? Do you want more theta? Do you want more neutrality? You can't load up on being more neutral in every single trade, because then all of a sudden, if the market moves big, then you lose big.
Yes.
So,
and this only takes us about $1,100 in buying power.
Yeah, I actually like that trade. I mean, it's actually, what's that? 40. So at 40, you'd make your most money at 40.
Yeah.
Yeah, right.
You make the most money at 40.
Yeah,
and
you basically
another
make
benefit,
almost $2,000 if it goes down to 40.
Another benefit, Masu, is that when the market goes down, the VIX usually goes up, and that would actually make this trade increase in value. So it could potentially make more than what you're seeing on this risk graph.
Yes.
If volatility increases.
I can see that. Yeah.
So, I like that trade actually.
So I'm going to make a note of that one so we don't forget it. And
I got a cool idea for you, Dale.
okay.
Switch over to
Do you want me to do a screenshot of this
No.
whole thing
well,
and then
for
put
now,
it in his portfolio?
You could do that, but for now I want you to try something really quick for us.
All right.
Switch over to Trade Diff.
Can I take a picture of this screenshot?
Yeah, sure. We're gonna do something that
So how much is this trade going to cost us?
About $1,200.
What is
Cool.
that?
That's not bad at all.
230 debit. Yeah, $1,200. Okay.
Yeah.
That's pretty good.
Well,
That's pretty
that's
good.
what it's going to cost you in buying power. I'll put it that way.
That's a pretty good risk reward for me.
I think so too.
Because if you can make $1,000 potentially on that $1,000, you make 100% on your buying power. That's pretty good for a diagonal.
Yes.
Yeah.
But yeah, I want to show you something that I built that I think is a good.
And
perfect
I
time to
think
use.
if I put this in Masu's Collaborate,
That's fine.
at least it kind of shows him how to do
Yeah.
that for the future. And that's
Yes.
kind of educational too. So I'm
Look
going
at
to
this
do share screen and then go over here. And I'm going to go back to Masu's portfolio. And then I'm going to go into Collaborate
By the way,
here.
Masu,
Yeah.
ideally we would be doing these trades as you were making money, the market going up.
Yes.
That would have been ideal. As the market goes up and you're making money, you should be thinking, well, I'm doing well now, so what kind of bearish trades could I start adding? And then when the market comes down, you would have been making money already on this.
Yeah. So when the market's going down, you need to look at, what bargains are out there? And when it goes up, you need to be going, hey, what
Yeah.
bearish trades could I? So you kind of, you become contrarian.
Yeah.
So what's cool here, Masu, is I've now posted this risk graph under the Collaborate tab in your portfolio. And the way I did that is you go down here to this little white strip where it says post to the launderer. And I choose a file that I've saved on my computer. And I go up here to LVS is what I called it.
Right.
And I'll type in, here's the risk graph. And then I hit enter and it posted. I guess it already put it on there, so it doesn't put it twice.
Yeah, it
But
did.
that's essentially how you post stuff. So it kind of gives us a way of capturing all these ideas that we're talking about so we don't forget
So
them.
can we try something, Dale? I want to show you
sure.
real quick. Go ahead and go on trade. Go to actually. Oh, hold on a second. Oh, this is Go back to the portfolio view, the main portfolio view.
Of my portfolio view or his portfolio?
No, the launderer. Yeah,
Okay.
you're good. Hover over one of those straight like rows and click on hover over anyone. Yeah, click on the chain link, the hover button, that chain link. So go to the right a little bit. Right there, the left.
Oh, that's like a dollar sign.
Left,
thing.
the chain, the right, go left one. Yeah, right there. It's kind of
okay.
It's kind of messed up because it's. I gotta fix that. I'm fixing that today actually. So what I want to do is put in LVS there.
Okay. Okay.
And hit get chain. And do me a favor and just click on one of those.
Do you want to put the one that we put in?
I was thinking to do that, but I'm not sure if I corrected it yet. Hold on, click on one.
All right. Well, let's try it for the real one. So we want to buy the August 45s.
Yeah.
And we want to sell.
Oh, sweet. Okay, it's gonna work.
Sell the 40s in July. Right?
And you want 5, right?
Yeah.
Right.
Now click on Save Trade.
Market is closed. It's giving us a trade error because you set those parameters up for our contest.
Oh, when the market is open, right?
Yeah.
That's too bad because what I was going to show you is that it would have saved the trade for you, so you would actually go back to your launderer. It would actually saved it under that first row, Save Trades.
Yeah, and the reason to give you some background, Mike set up some parameters to keep in the contest people from actually making trades when it's not market hours.
Yeah.
I see. Okay.
Yeah.
Yeah.
Anyways, it would have been cool to do that, but it's okay.
All right,
I
guys.
like the fact that you posted it in the Collaborate tab.
All right. Well, any other questions you had, Masu? I think this
that
is
was
good.
awesome session.
No,
Learned a lot.
just to recap, Masu, I think at this point, start looking for ways to get some, a little more bearish deltas in your portfolio.
Yeah.
You got plenty of bullish deltas, so you're not going to miss anything when the market goes up.
Yes.
And so with all of your relatives, when you're brainstorming on these things, say, okay, well, what could you be bearish on? They're like, what's a bear? And you go, what are those things that you think are not going to be successful? Let's talk about that. So maybe it adds some new conversations.
I will do that. Definitely. I will do that.
All right. Well, good luck to you this week and the rest of your weekend. And
thank you. Same to you.
All right. And
thanks, Mike.
Thanks, Mike.
Appreciate it.
Have a good one.
Bye.
Bye.